Hey there everyone. I wanted to share with you one of my favorite indicators that I like to use. We actually use it for a couple of our trade setups. For the counter-channel continuation setup we use an ADX, and for the three amigos we actually use three different ADXs on three different time charts. The indicator I'm going to go over is the ADX DMI, and you don't need to use both of those, ADX, DMI. You can just use the ADX, but I'm going to show you why you might want to incorporate both of them. Now with Sierra, it's one indicator. It's called the ADX DMI. In Ninja, it's called the DM, like Dennis Michael. So let me get right to it and show you why I like it so much. Okay, so this is the NQ today, today being Tuesday, October 29th. Let me change charts. This is, now that it's up, I'll just tell you what it is. This is an entry chart that we've been using with the Ichimoku indicators on it. So the lines, the vertical lines there are actually setups that occurred today. I'm not going to go over those. Let me just use a cleaned up chart here without so much going on, so you can get a clearer picture of why the ADX DMI is something that can give you a heads up on a few things. Okay, so here's a cleaned up chart, and the ADX DMI is the indicator on the very bottom. The green is the plus DMI, the red is the minus DMI, and the purple yellow line is my ADX. Now the settings I'm using on this are all 9 for this range chart that I'm on, and by what I mean is all 9. Let me just show you real quick. Let's find it. Oh, it would help if I just click down here. Here we go. It's actually DMI ADX. I said ADX DMI, but it's DMI ADX. So here's the indicator, DMI and ADXR. This is in Sierra. The lengths for all of them are 9. And if you're trading off a time-based chart, you can try 9, or you can use the default settings of 14. And I ignore the ADX XR, so you can play with it and see what you like to do. Now the ADX measures the strength of the move, and so like I said, for one of the setups that we take, we're watching that. I have a line drawn at 20, but just a simple tip that you might find really helpful is when you have the ADX come outside the top end of the DMI. Sorry about the dog, you guys. And start lower, that's usually a good indication of a stall and or retracement. So you can see here the ADX comes outside the top end of the DMIs, and then we get our retracement. Like I said, the ADX measures the strength of the move, but it does not tell you the direction of the move. The ADX will be rising if price is moving strongly higher or lower. It really doesn't matter. It's always going to be rising. So it's not telling you which direction. It's just telling you the strength of the overall move. Now, I don't really use the plus or minus DMIs for anything except for exactly what I just showed you. ADX coming outside the top end of the DMI, and we expect a stall or retracement. Here you can see it coming outside the top end of the DMI, starts lower. Here's your retracement. And you can just look at that over and over and over and see many occurrences of that. And it's usually a good heads up. Like if you are sitting in the trade, let's say, and you wanted to trail your stop, you might want to tighten your stop because you're due for a pullback. So again, up to you how you want to use it. Here, ADX coming outside the top end of the DMI, barely, but it does. Heads lower. Here's your retracement. This one keeps on going, but you can see many instances of that. Just look back on your chart. Also, when it's helpful is when price is just chopping sideways. You'll find that the ADX will basically be flatlining under the DMIs, and the DMIs show very little space in between. Everything kind of looks tangled up. I'm sure I can find you a good example of that during like pre-market or something. Let's see. Okay, here is one yesterday afternoon. It's late. It's after 4:30. Not obviously you wouldn't be looking at this to trade at 4:30, but here's a good example. ADX under the DMIs, and you have price just chopping sideways. Another way that it's helpful is, depending on what indicator you use for spotting divergence. Now, what I like is I like the stochastic. I just have an easier time spotting divergence on the stochastic. So that's what this middle indicator is. But you can use your DMI for that as well. So here you could see, for example, price moving higher with higher high here than here. On the stochastic, you can see that we've got lower highs here than here. So that would lead us to believe that we're probably due at least for a couple bar retracement. You can look at the DMI and look at the same thing. You've got your DMI peaks here, and they're actually all equal there, right here. So that's still a form of divergence because we've got, even here, let's see, I drew the line in the wrong spot for using the DMI, but you can see here we've got, let me erase this line here, using these two highs here, we've got a higher high here than here, and using the DMI you can see that you've got equal highs. So that would be a form of divergence, expecting a couple bar retracement. If this peak here was higher than this peak, then it would be doing the same thing as price, and that would not be divergence. You can go to babypips.com and download a cheat sheet, and I'll show you the website and where you can find that on divergence if you're not familiar with it. So I just showed you 3 ways that you can use the ADX DMI. One is flatlining under the DMIs, good indication that sideways chop. Now it doesn't take very much for the ADX to get back above 20, or it doesn't even necessarily have to be above 20, but just starting to move higher away and then kind of back inside the DMIs, just price has to start to move. So I'm not sure that you will use it as a requirement to get in a trade, but at least if the ADX is flatlining under the DMIs, you're aware of that. You do have sideways chop. When the ADX comes outside the top end of the DMI and heads lower, good indication of a stall and or retracement expected. And also you may use the DMI peaks for spotting divergence if you so choose. Like I said, I prefer the stochastic, but whatever you like. So let me just go ahead and show you where you can get the cheat sheet for divergence. Let's just bring up the internet here. So go to www.babypips.com, and it may take a second to load because there's a lot usually on their page. And then right here under search, type in divergence cheat sheet and hit search. And then it will bring up a couple options here. So right here under divergence cheat sheet, just click on it, scroll down, and there it is. So that will give you a good explanation on divergence. I don't use hidden divergence. If you're somebody who trades off a larger chart or a daily chart, if you're a swing trader, you can benefit by hidden divergence, but I just use regular divergence. For the size charts that I trade off of, I day trade, so the hidden divergence doesn't do me much good. So I hope that helps. If you want more information on the setups that I trade, you can go to www.easyminitrade.com. So enjoy your day, everybody.